Welcome back to the cryptowrld channel, everyone. My name is Josh, and this Bitcoin chart is telling us where the price might be heading next. So I'll be talking about that in just a moment alongside Ethereum later in the video. And I'll also give you a quick update on the Celsius situation. So definitely stick around. First of all, starting off on the daily Bitcoin chart, looking at the hash ribbons indicator, this is still showing this capitulation signal, which basically means we're still in the middle of that minor capitulation, because the 30-day moving average of the hash rate, which is the green line in this indicator, is currently trading slightly below the gray line, which is the 60-day moving average of the Bitcoin hash rate. And what this means is the Bitcoin hash rate is currently experiencing a slight pullback due to Bitcoin miners being unprofitable. Now, of course, that doesn't mean that all Bitcoin miners are currently unprofitable, because there's more than just the Bitcoin price that factors into the profitability of Bitcoin mining, such as where you get your energy from or how efficient you are mining Bitcoin. So basically, we're seeing the weaker Bitcoin miners drop off, and that could be due to multiple different reasons, such as the Bitcoin price being low enough where it doesn't cover the electricity costs, or perhaps some of these weaker Bitcoin miners dropping off might have accumulated their hardware through leverage, aka loans. And if they have to repay that debt with now interest rates rising, obviously that could put them in stress. But for the most part, the Bitcoin hash rate has only had a minor pullback. We haven't seen anything close to what we saw in the middle of last year, which, by the way, that was caused by China banning Bitcoin mining. And as you can see, the Bitcoin network has fully recovered all of that lost hash rate. Because what happens when Bitcoin miners start dropping off? Let's just say if Bitcoin mining is unprofitable for smaller Bitcoin miners, then in the short term, that begins to decrease Bitcoin's hash rate. But keep in mind, every 2016 Bitcoin blocks, we have an automatic difficulty adjustment, which adjusts the difficulty to mine Bitcoin. And by the way, 2016 Bitcoin blocks based on a 10-minute block time is roughly 2 weeks. So every 2 weeks, roughly, we see that difficulty adjustment. And in that 2-week period, if we see the hash rate go down, the difficulty obviously adjusts down, which means it becomes easier to mine Bitcoin. And with less people competing to mine Bitcoin, Bitcoin mining becomes more profitable after a time period like this, or especially like what we saw in the middle of last year. And generally speaking, when it comes to the Bitcoin hash ribbons indicator, which once again tracks different moving averages of the Bitcoin hash rates, anytime where we see a long capitulation, something that lasts for at least a few weeks, eventually ends up with a blue buy signal. And historically speaking, that blue buy signal has been extremely accurate for Bitcoin. Obviously, it was accurate just last year as we headed into August. But if you're zooming back further on the chart, you can see other buy signals this indicator has flashed. Obviously, we saw one just here towards the end of 2020, which was a great buy signal just before we actually broke the 20K all-time high. And then we saw 2 buy signals on either side of the Bitcoin halving during May 2020. And once again, if you're looking exactly when those buy signals took place, we immediately saw a pump in the Bitcoin price in the following weeks. The same can be said about that buy signal we had in late 2019. We immediately saw a Bitcoin pump in the following weeks. And going back even further on the chart towards the end of the 2018 bear market, we began a minor capitulation before the Bitcoin price capitulated towards the end of the 2018 bear market. And then after the bear market bottoms out during the maximum opportunity phase, we saw that blue buy signal, obviously giving us a great buy signal in hindsight. So going back to the present day, you can see that we haven't yet seen that blue buy signal show up. But if the minor capitulation continues and we continue to see a short-term pullback in the Bitcoin hash rate, then eventually we'll get that blue buy signal depending on how long this capitulation goes for. Because if it ended right now, we might not even get that blue buy signal like what we saw back here in May 2021. We need to actually experience an extended period of time where the Bitcoin hash rate is essentially pulling back because the Bitcoin miners are capitulating. And then eventually, after all of the difficulty adjustments, it will become a lot more profitable to mine Bitcoin. And then those Bitcoin miners will start coming back online. And when that happens, that is when we would look out for that blue buy signal, which once again has historically been a great buy signal for the Bitcoin price. But it is important to mention that that is not financial advice for you. I'm just simply telling you what this indicator means for Bitcoin and what has historically happened. And while we're on the daily Bitcoin chart, if you're looking at the RSI, we're actually starting to see ascending lows. even though technically speaking, this is still in formation. We haven't actually confirmed the most recent low. But if you're looking at the last couple times that this has happened throughout this larger, longer term downtrend, then you can see that these time periods where we're seeing a higher low structure form in the daily RSI has essentially been a pause in the larger downtrend. And usually this is in the form of choppy sideways price action like what we saw in late May and early June, or like what we saw in the first quarter of this year, where you could argue for the most part we saw a lot of choppy sideways price action, but overall we were in a slight uptrend for the first quarter of this year, seeing higher lows and slightly higher highs. So basically right now in the somewhat shorter term relative to the daily Bitcoin charts, we're potentially just at another one of those time periods where we're seeing a pause in the larger downtrend, which means we could be due for more choppy sideways price action, especially if this higher low actually confirms in the daily Bitcoin RSI, which I will be keeping an eye on and I will keep you updated. And now taking a look at the short term, zooming into the 4-hour Bitcoin chart, you can see that as of recording this video, the Bitcoin price is still finding support around this golden pocket when you bring out the Fibonacci retracement tool from swing low to swing high on the 4-hour chart. And this golden pocket is currently coming into play at around 19,000 approximately. Now, if we see a confirmed break below this golden pocket, then I would immediately expect a drop down towards the 78.6% Fibonacci level, which is where this initial price target for the rising wedge pattern is coming in at, and that is coming into play at around 18.3k to 18.4k. And anything lower than that level, then the full technical price target for a rising wedge pattern is towards the bottom of the wedge, which is coming into play at around the high 17,000s. But in the immediate short term, just based on the RSI and the MACD alone, it does look like we're seeing a lot of reduced momentum in either direction, which once again means choppy sideways price action in the shorter term. And I did actually make a video just a couple of days ago talking about how to make money in choppy sideways price action, and it covers a simple yet profitable strategy that stays away from leverage and liquidation prices. So if you missed that video, definitely check it out on the channel and I will link it down below in the description. And now giving you a quick update on the Celsius situation, and over the past one day, Celsius has repaid around $50 million of their 3 main debt positions, their on-chain loans, if you want to call them that. And in case you don't know, this actually reduces their chance of getting liquidated on those positions. Now, the positions I'm talking about, first of all, one of their most famous debt positions is this one right here, which is their wrapped Bitcoin vault, where they have nearly $500 million worth of wrapped Bitcoin sitting in there as collateral. And over the past one day, Celsius has paid down this loan by around 22.63 million US dollars, which actually drops their liquidation price for this particular loan down towards 12.2k, which basically means if the Bitcoin price drops below this liquidation price, then this position, this collateral, starts getting liquidated, which basically means it gets taken off Celsius's hands and potentially starts dumping onto the market. Now, obviously, that situation would be extremely devastating because not only would it mean that Celsius would obviously lose a lot more money, it would also very likely bring the Bitcoin price down a lot lower. But remember, for that to even start happening, the Bitcoin price, first of all, needs to already drop below this liquidation price at around 12.2k. And considering Celsius is continuing to pay off this loan and lowering that liquidation price, this is actually heading in the right direction. And just for those of you who didn't know, this liquidation price for this position originally just a few weeks ago was actually above the current day Bitcoin price. It was sitting at around 23 to 24,000. So basically, if Celsius didn't halt withdrawals and act fast, they would have already been liquidated on this loan. Now, this is just one of the 3 main loans that Celsius has paid down over the past 24 hours. If you're taking a look at the other 2, we can see on chain that Celsius also paid down their compound loan by another 20 million and paid down their Aave loan by another 7.36 million over the past one day approximately. So overall, when you add up those numbers, that's around $50 million that Celsius has paid off those 3 loans over the past one day, which is actually pretty good to see because overall this is lowering their liquidation price for these specific positions. But obviously, we unfortunately only have access to the public information, the information that is on the blockchain. And as of right now, there's simply no way for you or I to actually confirm confirm their entire position on and off the blockchain. But either way, I'll continue to keep you updated from time to time on this channel and in real time as soon as something happens over on my Twitter. So make sure you follow me on my Twitter for extra updates just like this throughout the day. And the link to my Twitter is in the description down below and also in the pinned comment. And now getting into the Ethereum part of this video, this right here is the weekly Ethereum chart. And obviously we're still holding around that 38.2% Fibonacci level as of recording this video, which is sitting at just above $1,000, more specifically at around 1,050. So on the weekly time frame, nothing much has changed over the past one day. Now taking a look at the 12-hour Ethereum chart, and also nothing much has changed over the past one day. We still have a potential bear flag here if you're basing from the candle closes on the 12-hour chart or the daily chart. But if you're looking at the candle wicks, then we do have a potential ascending triangle pattern, which is actually a bullish pattern historically speaking. And also when you're looking at the actual price structure, higher lows shows increased buying demand, while horizontal highs shows stagnant selling pressure. So in order to confirm one of those patterns and disprove the other, we just need to see another low form for Ethereum, whether that's a horizontal low confirming the bear flag, or another higher low, which would be very good news for Ethereum because that would mean we're no longer forming a bear flag and instead we're forming an ascending triangle pattern. But in the meantime, the level of support to pay attention to is basically that $1,000 level. And as for resistance, we have strong resistance at around 1270 to 1280. And in the meantime, just in the shorter term, I still expect more choppy sideways price action, relatively speaking. Now, if we zoom into the shorter term, taking a look at the 4-hour Ethereum chart, we can see that we're still finding support along this golden pocket, which is coming to play at around $1,000. And obviously the subscribers on this channel would already know this, but this was actually the first technical price target for this rising wedge pattern, which obviously I was talking about even before we hit that price target. And not financial advice for you, but I'll let you know that personally, I would be taking at least some profits from a short position at around 1,000 to 1,050, because in the short term, we're due to see a bounce from that level. And obviously we're now playing out that bounce in the short term. Now, if you're looking at the 4-hour Ethereum RSI and the 4-hour Ethereum MACD, these are showing slightly more bullish momentum for Ethereum than Bitcoin at the moment. But overall, the momentum is still relatively low at the moment. So once again, I still expect mostly choppy sideways price action. And just pay attention to those levels that I mentioned earlier for a potential continuation of the downtrend or a possible reversal into a more bullish trend if we break this resistance. So once again, in the shorter term for Ethereum, we're most likely due for more choppy sideways price action. But of course, the larger trend, for example, the trend on the weekly time frame, is still well and truly a bearish trend. We have not reversed this trend as of right now. And definitely check out one of these videos popping up right here on your screen. In the top left is a video that shows you how you can make money if the price is going down or up. And in the bottom left is that video that I talked about earlier, showing you how you can make money in choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.